Welcome back to the channel, guys. In today's video, I'm going to be reviewing iShares DVY ETF versus Schwab's SCHD ETF. But right before we get into that, let's just look at my portfolio year to date. So it's currently worth $49,256.69. I've lost $4,170.55 this year, and I've earned $1,496.97 this year. And then since I do own the SCHD ETF, year to date, I have $14,977.91. I've lost $947.94, and I've earned $329.21. And by the end of the year, I should have earned close to $500 in dividends. But let's just see real quick. I have 215.1 shares at an average price of $73.29. So I am down on SCHD quite a bit because the current price is $69.63. And then so let's go over our first stock is going to be DVY, but as I said, it's an iShares ETF. iShares is owned by Blackrock, and just some quick information. BlackRock created the world's first index strategy more than 30 years ago. They're the largest asset manager in the world with a proven track record in developing index-linked strategies aimed at maximizing investor returns over the long term. So this is a really good investment company. So let's see how their ETF stacks up against SCHD. So we have the iShares Select Dividend ETF, DVY, current price of $105.25. Year to date, it's down 12.68%. So that's down quite a lot, especially compared to the S&P 500, which I'm going to click it right here to see where we're at year to date. S&P 500 is the complete opposite, up 12.67%. All right, so now let's look at the iShares Select Dividend ETF. So why would you want to invest in DVY? You would get exposure to broad cap US companies with a consistent history of dividends, access 100 US stocks with 5-year records of paying dividends, and you use it to seek income. So it's good that they do have the rule 5 years of paying dividends. And then they do have an expense ratio of 0.38%. It's not too bad, but it is a little high. It's a little bit more than JEPI's expense ratio. So now we're going to scroll down, just look at some key facts. $17.5 billion in net assets. They started the fund on November 3rd of 2003, so it's almost been 20 years in a month. Then if we scroll down a little bit more, it says they have 99 holdings, an equity beta of 0.8, so that's actually really good. Any beta under 1 is what you want. And then they have a dividend yield of about 4.12%. So I'm going to scroll down a little bit more to their key holdings, top 10 holdings. So they have Altria Group at number 1. This is a stock that I own. Verizon, another stock that I own at the second spot. IBM, another stock that I own. These actually top 3 stocks, I own all of them, and they have really big dividend yields. Next is a company that I don't know. It's an energy company. I don't even know how to say that, but ticker symbol OKE. Then they have Prudential Financials, Philip Morris, which is another high dividend yield stock, and similar to Altria Group. So they have ticker symbol LYB. And then AT&T, another high yield stock. Even though AT&T cut their dividend by 50%, it still is a high yield. And then we have International Paper. And then last, Ford Motor Co. And one thing I actually like about these top 10 holdings, you can see they're not weighted very high. The highest weighting, Altria Group, is 2.58%, and the lowest weighting is 1.62%. So they actually weigh out their stocks a lot lower than a lot of other ETFs. So that is a positive thing that I like about this ETF. Then if we just look at their exposure, they have 26.15% in utilities, 23.64% financials, 9.45 in consumers, staples, 8.93 in materials, 7.58 consumer discretionary, 6.45 in energy, and then down the line they have communication, information technology, which is actually really low for an ETF, 4.79%. Then industrials, healthcare, and then cash and other derivatives. So all in all, I liking the look of their top 10, their exposure. Now let's go to SCHD, which is currently at $69.63, and it's down 7.7% year to date. So it is outperforming iShares DVY ETF year to date, and by quite a bit, about 5 percentage points. Next, we're going to look at SCHD's fact sheet. Their expense ratio is 0.06%. So that is 6 times cheaper, a little bit over 6 times cheaper than the DVY. So that's already a positive for SCHD. So their goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. They highlight a straightforward, low-cost fund offering potential tax efficiency. The fund can serve as part of your core or complement in a diversified portfolio. It tracks an index focused on the quality and sustainability of dividends, and it invests in stocks selected for fundamental strength relative to their peers based on financial ratios. And just some details on this. The fund was started on 10/20/2011. So it's actually coming up on almost, 12 years. They have 46.5 billion in assets, which is a lot more than DVY, especially since DVY has been around for so long, like much longer than SCHD. And Blackrock is the top investing firm, so you'd think their dividend ETF would have more money into it. And then we scroll down, we can look at the portfolio, the top holdings. So you have Amgen, AbbVie, Chevron, Pfizer, Merck, Broadcom, Verizon, Cisco, Texas Instruments, and Pepsi. So the only overlap was Verizon. And then if you look at the top 10 of SCHD, you can see that Amgen is at 4.48%. And then the bottom, Pepsi, is at 3.86%. So there's a lot heavier weighting at the top. And maybe I would like to see the weighting spread out a little more, make it a little bit more diversified. So we look at the sectors. Industrials is at 18.13%, healthcare at 15.6%, financials at 14.54%. So I think financials has come down. Consumer staples at 13.14%, then information technology at 12.5%, energy at 9.06%. Then you have consumer discretionary, communication services, materials, and utility is actually at 0.31%. Whereas with DVY, the utilities were the highest percentage. But all in all, I do like SCHD's diversification with their sectors. I do like it when as ETF doesn't have as much in tech, just because I don't like to have ETFs that are way overloaded with tech. Even though tech performs well, tech is important. I still want to see, money in healthcare, consumer staples, discretionary, and utilities, and so on. So now let's look at the back test. Initial amount, $1 million. Reinvest the dividends, display the income. So I have DVY, SCHD, and VOO all at 100% of their portfolios. I already did click the analyze button. So we're going to scroll down. So with an initial balance of $1 million, DVY ended at 3 million. SCHD ended at 3.8, almost 3.9 million. And VOO is at the top with 4.26 million. And then if we look at the best year, honestly, it's so close that it's almost irrelevant. but DVY at 31.68%, SCHD at 32.89%, and VOO at 32.39%. So SCHD won the best year. Now, in the worst year, DVY at negative 8.05%, SCHD at negative 5.56%, and VOO at negative 18.19%. So SCHD won this one again, and VOO was a major outlier compared to the other two. Now, this is just the portfolio growth chart. You can see started at 1 million at basically the beginning of 2012. And then DVY actually had the largest drawdown for the pandemic. And then it didn't really recover as well as VOO and SCHD. But now what I want to look at, the dividends. So starting in 2012, DVY was the winner at $39,987, followed by SCHD $31,273, and then VOO at $24,887. And it's not until 2020 when DVY is surpassed by SCHD, which almost earned 100 grand. Then if we go to last year, you have DVY at $110,041, SCHD at $133,778, and then VOO at $63,193. So looking at the total return for DVY, SCHD, VOO, VOO wins on total return, SCHD wins on dividend income, but I do have to say, in my opinion, DVY can't really knock it for having over six-figure dividend income. All right. And with AT&T cutting their dividend by 50%, I believe DVY would be really close to SCHD. It might be at 120, getting up there. It might have even beat SCHD. But of course, not over the long run, because SCHD does have better dividend growth. So that's just my opinion. I would still probably go, if I had to completely start over, with 50 SCHD, 50 VOO. I think I like that breakdown the most. So guys, thank you for watching this video, and I will see you next time.